Hi guys, good evening. From wherever you're watching me from, it's Abe Forest here. So today I'll be doing my pre-analysis for the week on cryptocurrency, on commodity, on currency, and also stocks and stock indices. I'll be starting with the dollar, which is the dollar index. Yeah, the dollar is strong. All the data that we are expecting to be released, every economic indicator that we're expecting from the dollar, majority of them was quite positive. Okay, yeah. Starting with the economic and growth bias. So when we look at the GDP looks bearish. From the actual versus the forecast, GDP for quarterly, was quite bearish. So we didn't have, it wasn't, the forecast was 2%, and we had actual, which was 1.60%. So the manufacturing PMIs came, better than expected. The actual is 54, and Wall Street, they forecasted for 53.3%. So service PMIs is quite bullish, retail sales bullish, because we have 0.90% as compared to the 0.50 forecast. So it was quite bullish from the economic growth bias. And looking at the inflation bias, inflation is quite sticky, and the producer price index came out better than expected, which is 6.5%. Meanwhile, the forecasted was 6.4%. And also we have the PC, which is personal consumption expenditure. It's neutral. The 2-year yield is bullish at the same time. And looking at the job market, is quite bullish too. The non-farm payroll came better than expected. The unemployment claim was quite neutral, and the weekly job claims bearish, means that the forecast was much more bigger than the actual. And the ADP employment change was quite better than expected. We have 122k as compared to 118k. Then the job opening was quite it came better than expected, which is 7.62 million as compared to what Wall Street determines, which was 6.86. All in all, the dollar index is quite bullish. Then when we look at the technical charts, you'll find out that the market is quite bullish. You understand? So starting from the 4 hours, you notice that the market just broke through from this resistance and came back to this $100 there was a kind of pullback, then broke out from this resistance as well. So all in all, the dollar is quite bullish throughout last week. So dollar is trending as against every other pair. Now moving to gold, dollar and the DXY has an inverse relationship with gold from the onset. And looking at gold has been on a bearish market for quite a number of months now, and that can be traced back to the dollar, which is strengthening, and at the same time the geopolitical tension that is happening in the Middle East, which is Israel stroke Iran and the American government having a back and forth ceasefire. Now I'm going to go to my daily time frame. Now my daily time frame is telling me that looking at what we have here, we're expecting a bearish movement. Being the fact that there was supposed to be an de-escalation and a kind of ceasefire. They've actually made an agreement, but over the weekend, Israel and Lebanon had a kind of they went against the ceasefire agreement. So which means that on Monday morning we're going to be having a gap down to the downside. So instead of the market recovering from the losses from the gold, but looking at gold on the longer term, on the long term basis, you notice that gold is on the upside for quite a number of years. Gold is meant to be bullish, but that has been the case for over some years back, from 2023, 2024, 2025, if you look at it closely. But the reverse is the case right now, due to the challenges in the Middle East, which is the energy shock. I think that's one of the catalysts that is affecting the direction of gold, that is making it to come down. So at this point, we're expecting, and looking at what gold is doing right now, there's what we call the 200-day moving average. So gold is trading below the 200-day moving average, which is another indication or indicator that that the market is quite bearish. So looking at what we have here, let me go to my indicator, 200-day moving average. So the market is quite bearish, you understand. So for the fact that it's trading below the moving average, the market is it's quite bearish. Just hold on. Okay, so look at it now. The market is trading below the 200-day moving average, so the market is bearish. In fact, in the short term. So let's see what happens between now and when the war is over. Maybe the market is going to snap back up to the top. So that is for gold. The same thing applicable to silver as well. So because they are precious metals and they are commodities, so the same thing applicable to gold is happening to what the metals, which is the silver too. Now when we look at oil, which is one of the major shock that is causing inflation all over the places, is because of the geopolitical tension that is happening in the Middle East. If you look at it very closely, the market has when the war started, the market went up higher to create a new high, and now it's snapping back, because of this ceasefire, the escalation and de-escalation. So because of that, the market is still coming down, but it has not reached when the war started, the price of oil per barrel was around $67, but now, as soon as the war started, there was kind of increase in the energy, and that has created a shock globally. So that is for US oil, so which is having an effect too on gold. But normally gold is supposed to be having a reaction based on the dollar index initially from the onset, you understand. But now that there's an energy shock, and I told you that from the Middle East, they are selling off gold so that they can be, and they've amassed a lot of gold, because of the dollarization. I've said this many times in my videos. So now, for anyone that want to trade this week, because dollar is strong, if you are, there's what we call the base price, base versus the quote price. Any currency that is at your base, for instance, you have USD JPY, or if you have GBP USD, GBP is the base while the USD is the quote. But if I'm saying USD JPY is the base, USD is the base while JPY is the quote. For anyone that wants to be trading earning USD pairs this week, gold is strong. So if you are trading USD JPY, that means that you should be looking for buys because of the strong dollar. And if you are trading GBP USD, that means that you have to sell. That means that the gold is the currency, which is dollar, is stronger. You understand? So that is that about that. Then the same way, looking at the stock market, the S&P 500 is going up higher. When the war started, it came down. Then a straight 9 weeks gain came, created a new high, and now it's giving us a technical structure here for another pull up to the upside. So I'm looking at S&P 500 to the upside. Meanwhile, Nasdaq too to the upside. You understand? And Wall Street, Dow Jones too to the upside. This is my Nasdaq, US 100 to the upside. The same thing happened. That's at the top 100 tech companies in America. After the war, when the war started, there was a decrease to the downside. Then nice straight weeks when quarterly earnings were released and it was positive than expected. There was again this AI boom that is happening all over the places, has created a kind of more than high points in the Nasdaq and also the Dow Jones and the S&P 500. So that is for stocks. And moving to the cryptocurrency, it's also a risk asset and is borne by inflation, and there's global inflation all over the places, and that is one of the reasons why you find out that the cryptocurrency is selling off. You understand? So they are all risk assets, and as far as the dollar is stronger, moving up to the upside, then they should be moving to the downside. And at the same time, you notice that there is inflation. So because of that, technically, I'm bearish when it comes to the BTC USD. So looking at what I'm looking at this, there's a structure here. Before you can enter this trade, you allow it to either break to the downside before you take your sell if you are going to be trading BTC USD. So meanwhile, my bond, which is the what do you call it, bond treasuries, you notice that is coming to the downside because the yield, 2-year yield, is moving to the upside. So when they work in inverse, they inversely relate when it comes to bonds and bond yields and bond prices. As soon as the bond yield is going up higher because the dollar is stronger, the bond prices will also go down. So if you are trading this, you have to compare these two pairs together. If you are trading USD JPY, like I said previously, if you are trading Euro USD, because USD is the quote price, that means you should be selling. You understand? Because the dollar is strong, so you should be selling. Can you see it now? Just do your technical analysis, and if you are trading GBP USD, you should be selling as well because the dollar is stronger. Meanwhile, if you are trading the USD JPY, where USD is the base currency, you should be buying because the USD is strong at the moment. But you have to consider if there's any news in Japan. If you are trading USD JPY, then the same thing GBP USD, you have to consider news from the Great Britain, which is Great Britain. Yeah. So that is what I feel about the market this week. Moving to the new week. So I think I've touched everything. So I'm going to see you guys in another episode. All right, take care. Bye.